Hey, what's up you guys? My name is Abir, and in this video I will talk about if I were to learn investing in stocks in 9 steps, what would those 9 steps be? So before starting this video, I wanted to make one thing clear. I'm not a certified financial advisor or any person who can give a financial advice to you guys. I'm just sharing my experience and what I would do if I want to, invest in stocks. So these are the 9 steps which I think you can master by investing in stocks as well. So before starting this video, just wanted to make sure that if you haven't already subscribed, I would request you to subscribe and like this video if you get something out of this video. And also I will paste some other links to my other videos in the description box, so if you like those videos you can go ahead and start watching those videos as well. So without further ado, let's get started. So the first step before deciding anything is to set up a goal. Determining your goals is the first step to investing. So investing begins with not with the money, but with the mindset that you should have. So if you have a full-time job, good for you. If you don't and you are working part-time and or here and there and have saved up some money, the first step is to have a financial goal mindset in your mind before you start this journey. A very important and a very interesting software that has just been made free now is Notion. So Notion is basically an application which you can download on your mobile device, or even if you have a desktop or MacBook, it does come with all of those. And it's free, so you can just download this, and I've been using this as well. It's a really good organizer, you can call it, but it's a little complex for starters. But this is something that you can starting from to-do list, you can create multiple things and track your days and your goals, as we are talking about financial goals here. So you can have everything set up in this way. So Notion is the app to go if you haven't already installed any note-taking app or anything on your computer, PC or Mac, whatever you use. So that was our first step, to set up a goal. So say for example, a financial goal should be very clear. So they shouldn't be anything like I will save up 25% or anything like that, but the numbers should be there. The numbers should be really clear in your mind. So those will be the goals that you will be setting up for your investing journey. So this was first step. Then number 2 is creating an emergency fund. So what emergency fund is, it's really well defined, and a really good article on our on a website called nerdwallet.com. It's a premium website, and you'll find a bunch of content that is really nice up there. So after watching this video, you can go ahead and read this emergency fund, what it is and why it matters, article that has just been released recently in the month of March. So basically what it means is, if any emergency happens, it could be any medical expenses or home appliance repair or car fixes or anything that you are not committed to pay for, but you have to, or you need to, then this is the fund that you will need to have. And usually what people do is, an easy formula for this is, you should have at least 3 to 6 months of emergency funds, which basically means your expenses of every month. You should have at least 3 to 6 months of your expenses saved up. So in case of any emergency, if you get laid off or you lose a job or any unforeseen issue happens, then you won't have to dig into credit cards or get into debt. So that's the second step before starting investing, right? And then third comes the retirement account. So what retirement account it really depends. There are multiple types of retirement accounts. You can have 401k, you can have Roth IRA, simple traditional IRA, and there are a bunch of them. If you are a freelancer, you can set that up as well. But what I would suggest is, if you have a full-time job that you are working on, then it most likely your employer be creating a 401k plan for you. So what it means is, they will be contributing some money to your bank, and you will be contributing the same amount. So there is a thing called employer's match. For a 401k, if an employer gives you 3% or 4% match, what it means is, the 4% of your annual salary, the employer will be contributing an extra 4% to that, and then you can contribute from your salary, and this is pre-tax money from your salary to that, and then basically it will be combined, and it will be the 8% of your annual income. So that will be used in buying bonds or whatever you want to buy, securities like stocks or index funds or stuff like that. You can do that. So for that to set up, you can use an investment platform called M1 Finance. And this M1 Finance is basically a platform that allows you to set up Roth IRA if you are going for that. And the 401k setup is basically sets up with the employer. So whoever your employer gives you the 401k plan with, so you will have to go with that. But for Roth IRA is the same as 401k, except two things. First is it's you own the liability, everything you own, so all the contributions to Roth IRA will be coming from you. And the second thing is that you will be able to select it on your behalf, and the securities, everything, as well as this is after tax money, so it's not pre-tax as 401k. So these two are major differences. There are others, but we're not gonna go deep into those as well. But this will be the third point, the third step for investing in stocks. Then number 4 is setting up an investing account. So if you are new here and you haven't have an opportunity to set up an account with any brokerage that allows you free trading or free buy and free shares to buy and stuff like that, then I have a couple of links, and those are referral links to M1 Finance or Robinhood account, which is another brokerage account. So these two apps you can sign up using my referral link, and you will get a share. In this case, in Robinhood case, a free share, and I will get the free share as well. Not saying you should, but these are really intuitive and really user-friendly applications, and above all, they are free to set up and everything. So there's nothing you will be losing here. So set up an account just like this one, and you can have it for investment. So this is really important. Fourth step. Number 5 is staying with index funds. So what is staying with index funds means is that usually what you do is when you start investing, you don't invest in individual stocks or buy companies stocks. So you don't go ahead and buy Tesla stock since it is super volatile. It's highly unlikely that you're gonna get a good deal. Over time you might get good response and good deal, and make some money, but to begin with, as a beginner investor, it is really important that you set up and you start with index funds. So those index funds are nothing but a combination of multiple shares or stocks. So one index fund can have multiple companies stocks in it, at different percentage. So say for example, an index fund of S&P 500 would be the Vanguard's index fund, or Spider SPY, and that tracks S&P 500 top 500 companies, and the growth that they see, and you will see in that one stock. So you are buying bit by bit all different companies when you buy one index fund. So that's really important. Another concept is having a good understanding of dollar cost averaging. That is our step number 7. So what it means is basically you won't be buying stuff or buying stock all the time, but what it means is you will be contributing to your stock portfolio. So what is a stock portfolio is basically anything that you invest in an account where you have invested your money in. So that is your stock portfolio. So what happens is when you start investing, you won't be investing all your money at once. So with the passage of time, you will be investing in different stocks, and that is called dollar cost averaging. So say for example, when I buy a Tesla stock, say for example the worth of that Tesla stock today was $1,000. So I bought one stock of Tesla. Now next month I want to spend another $1,000 in buying Tesla, then I'll buy at that time. So I'm not investing all $2,000 in one day. So that what I'm doing is I am dollar cost averaging my way to buy Tesla stocks. So it's really important, and it has its gains, and over time a lot of people have recommended this times and times again. And this strategy basically balance out your losses or even your profits across different stocks. So that's really important, dollar cost averaging. And then number 7 would be start learning gradually about investing in individual companies. So companies like Amazon or Microsoft or Apple or even Facebook, you can start investing in those, and those companies can give you good benefits because all of those companies worth over $500 billion each. Facebook is the least among these companies that I've mentioned, and which itself is worth over $500 billion. So these are Tesla, I'm sorry, not Tesla, Apple, Microsoft, and Amazon. These 3 stocks all worth over $1 trillion company. The market cap of these companies is over $1 trillion. So even if you see a loss in a day or two or even a month, over time when you dollar cost average, your cost will be less and you will be making more gains. So that's number 7. And number 8 strategy is to learn. learn. What I mean by learning is you keep on learning, and no matter what happens in the stock market, you keep on learning about different companies, you keep on learning about different index funds, and you make your way intelligently up and up. So it's not like you're gonna learn everything in one day watching a video or two, but you will learn with time. Start putting some time in learning about the business, about the company before buying the shares. It's like buying a business, so think about it before investing. And then lastly, the step 9 would be to diversify your investment. What I mean by diversifying your investment is, I can show you here. So this is a risky portfolio that I have created on an M1 Finance, and what I've done here is I have bought different stocks. So I'm not putting all my money, all this $800. I didn't put all $800 in one stock, but what I did is I spread out my money among different stocks. So $82 worth of the Trade Desk, then 68 in Tesla, 65 in Apple, 58 in Microsoft. So this is what I am doing with my money. So I'm spreading or diversifying my portfolio across different companies. So even say for example, one of the stock tanks, say for example, Shopify goes out of business tomorrow, then I won't be losing all $800, but I'll be losing only 20 odd bucks, which I'm fine with. So this is really important and a very good strategy, and one of the basics one, but helps you in a long way. So don't put all your eggs in one basket. This is diversifying your portfolio will give you edge over time, even if you lose on one or two bets that you make on a company buying its shares. So that is it. These are my 9 steps that I wanted to share with you guys. I hope you guys will like this video. If you enjoyed and learned anything from it, make sure to share and subscribe, and I will see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.